Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, April 21st. Let's go ahead and get started. First up, I'm going to share with you where we stand relative to the broader markets, where we closed, and always with an outlook and an eye towards sharing with you what to be on the lookout for going forward to prepare you for next week and beyond. We're also going to take a look at the underlying sectors, industry groups within the broader markets. You want to be aware of shifts, any rotation that's maybe taking shape, and most importantly from my work, where is that relative outperformance so that you in turn can capitalize on that. Also, we'll take a look at some of the headline news that was key in driving price action, although it was not very actionable last week, but we'll take a look at that news. And then viewer question of the week. And this is all about companies that have come out with strong earnings and have gapped up a large amount. The question is what to do with those stocks, how you should trade them. We'll get into that. I'll share with you examples of prior gaps up and what to be on the lookout for to be successful in anticipating further upside or not. So here we are with some of those news items from last week. First up, on Monday, we did get what's called the Beige Book, the Federal Reserve's temperature of the economic conditions. And among some of the conditions cited was the fact that loan activity has declined since SVB and SBNY, those large bank failures. And this is not great news for the economy. As there is a contraction in lending, you will see that spill out so that these companies are unable to get capital so that they can grow. We also received March data relating to the housing market, mixed but generally quite positive. And then with that gap up, I will share with you a company that in the construction, the housing market, that released very strong numbers today. Also, earnings reports and upgrades from analysts were the key drivers of stocks that really outperformed the broader markets. We'll get more into that as well, but despite a relatively flat performance within the broader markets, there was vibrancy among those companies that reported strong earnings. We did see weekly jobless claims. They climbed slightly. That is what the Federal Reserve is on the lookout for. They want unemployment to rise so that inflation can then be tamed. So very slow, certainly not fast enough for the investors, for the broader markets, but it is certainly going in the right direction. We also did get data relating to the leading economic index, and that did point to a recession as 7 of those 9 index points were negative, and it is negative subsequently. We've seen prior periods, but all signs from this particular data point to a possible recession down the road. We also did receive April PMI data, and it's an early report, but we did see the PMI rising. So that is going in the other direction. So at the end of the day, the data points this week overall were mixed and not very helpful for investors that are in a very uncertain period here as we're on the lookout for a recession and then also wanting to see inflation be lowered. Next week, pretty important period. We are going to get the first estimate for GDP for the first quarter of this year. That's going to be closely watched. Again, we want to see contraction, but not too much by way of contraction that would point further toward a recession. Core PCE index, this is another closely watched inflation gauge by the Federal Reserve later next week that will be reported. Also, consumer confidence and durable goods orders are out. All of this mixed with an earnings season that is ramping up even further. So from here, let's take a look. Where did the markets close for the week? And here we are with a daily price chart view of the S&P 500. A couple of metrics to pay attention to. And first up is this 10-day simple moving average. And we can see the S&P 500 barely clinging. It closed just below that key area of possible support, not overly concerning at this time because your momentum, the RSI and the stochastics, remain in positive territory. And here you can see the rather bouncy week that we've had, but net, we did end flat. So let's go ahead and move on. Take a look at the underlying sectors within the S&P 500. These are those 11 sectors. We're looking at a 2-month daily price chart view, and it's sorted by relative strength, that RSI indicator, in descending order. So what we can see up here at the forefront are those relatively stronger sectors are defensive in nature: staples, healthcare, and utilities. Each of these areas offer a higher yield, and they also provide products and services that are needed regardless of any potential economic recession. As we move forward, however, I will share with you the fact that the staples and healthcare areas were supported by strong earnings, as well as that move into these higher yielding areas given the uncertainty in the broader markets. So let's move on, take a look at some of these weaker areas that are beginning to emerge. Here we are with XLE, the energy sector, which had been really outperforming. This week, it did pull back about 2.7%. Your metrics relating to momentum do still remain positive, but we did see a pullback. I'll share with you one of the reasons in our next segment moving forward, but also did want to share with you XLY. This is consumer discretionary, and it was a little bit of an outperformer, up more than 0.5%, and we can see that it regained its uptrend by closing above these moving averages. A point here is the fact that XLY outperformed despite a 10% drop in heavyweight name Tesla. And then I will share with you an area that is bubbling up within. In fact, I mentioned it earlier, and that is housing is one of the bright spots there. So let's move back and take a look at one other area here in this sector view, and that is technology. And we can see that technology is generally also hanging on. However, you can also note that the momentum has shifted over the last 3 weeks. We also have a shift here in that MACD, black line down through the red, generally trending lower. Now, while technology did underperform a bit, I will tell you that there are bright spots here in this grouping, and I'll share with you that as we move forward. And here we are with a view, a 2-month daily price chart view of very selective ETFs that I find to be super powerful as far as staying on top of where the relative strength is, and then from there, ways that you can capitalize on that strength. So we talked about healthcare being at the forefront, normally viewed as a very defensive area, but let's take a look at these 2 sub-industry groupings up here that are in the strongest quartile, and both are sub-industry groupings for healthcare. First up here is IHI, and that is the medical devices ETF. Super powerful uptrend here, breaking out of this nice base. And this is all about, I'll go ahead and share with you a company that is in among many other names in this group, but it does exemplify strength relative to growth. This is ISRG, Intuitive Surgical, gapped up on very strong earnings. There are a number of other underlying medical product stocks that are also seeing solid uptrends. Another area in healthcare, biotech, IBB. This is the NASDAQ Biotech ETF. We can see a nice uptrend here developing, another week of outperformance here, all about innovative biotech companies coming through with FDA approval and other developments on products within this industry. As we move forward, we can take a look at other outperformers so you can be aware of, and that is Tech Software ETF, IGV. Now, it was relatively flat, but that uptrend does remain in place. There are a number of stocks in this group that are outperforming, and I do have several of them in my MEM Edge report as suggested holdings. So use that link below and you can trial that report for a nominal fee and receive 4 weeks of that twice weekly report. From here, you'll also want to be aware of some of these weaker areas in technology, semiconductors. This is SOXX, the semiconductor ETF, and you can see it's just kind of meandering lower, and it is now below that 50-day simple moving average. Your MACD just entering into negative territory, and your RSI negative as well. So overall, we are seeing weakness in the group due to mixed earnings releases. So that is an area that I'm going to be keeping a close eye on. Talked about energy pulling back this week, and here we are with Brent crude oil, and we can see that it did pull back. It's down at about $81 per barrel. We can see the momentum shift into negative territory there. Also, bank stocks still remaining one of the weakest areas. We did see a little bit of a rally on Wednesday as one of the larger West Coast bank stocks did show a report that withdrawals had been stemmed, but it was very short-lived. KRE is the regional banking ETF, and overall the group was up 1.5%, but that is down from a 4.5% midweek gain. The earnings releases from several regional banks have been very mixed at best. So from here, let's take a look at that gap up on earnings concept. And I will share with you this housing construction company name, and it's D.R. Horton, DHI. And we can see on this gap up yesterday, in response to very strong earnings, we saw big volume and the stock experienced a base breakout. I'm going to mark this up. And from here, I will share with you stocks that had this happen recently so that you can know what to be on the lookout for to tell you whether there could be potential further upside or not, whether that base breakout has reversed. So here we are on that move, gap up into a base breakout. RSI is positive, and then also very high volume. You want to see that high volume indicating potential further upside. We can see the momentum shift here with that MACD entering into already positive territory, but into an uptrend. If we go back historically with DHI, take a look at this gap up in response to their most recent quarterly earnings release. You can see that gap up, and in this case, DHI pulled back to this 10-day simple moving average and entered into a very strong uptrend. This is one way that these gaps up on earnings will respond, where they pull back and then enter into an uptrend. From here, I will share with you an example of a company that reported earnings several weeks ago, came in well above estimates, and take a look at how the company traded subsequent to that as guidance on how to treat DHI and some of these other gaps up. This is Duolingo, a software product that is designed to help individuals learn foreign languages. And here we are. I'll go ahead and mark this up. This company came in with earnings well above estimates. And let's take a look. We can see that gap up into a base breakout, super high volume characteristics that indicate accumulation. The stock did enter into an uptrend, pulled back to that 10-day simple moving average, and a nice continuation rally from there. Now, what I do want to share with you are gaps up into a base breakout that did not hold, and this is all about preparing you for companies that you may own so that you can know what to be on the lookout for. This is from last quarter. LZB and the company Lazy Boy did report very strong earnings, and the stock did experience that gap up, high volume after a very lengthy basing period. However, of note is the fact that subsequent to that, LZB did begin to deteriorate. So from here, when examining, or if you own these stocks that have gapped up on earnings, when you see that momentum shift get into negative territory, that RSI, your first signal will be that MACD crossover, black line down through the red. Pay attention to that volume. It's beginning to pick up on selling, and the stock, in fact, did experience quite a bit in the way of deterioration before leveling off. One other stock that we can take a quick look at that gapped up today on very strong earnings is Procter & Gamble, PG. Gap up into a nice base breakout, nice high volume. So keep your eye on that momentum shift here, potentially on both the MACD and the RSI, and then also volume. You want to see high volume as the stock continues to progress higher. If you begin to see selling on heavy volume, keep an eye on that momentum. We want to make sure that that uptrend remains in place. Everyone have a great weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.